Hey guys, how you doing? Just gonna test the sound a bit here, see how everything goes. You can let me know what the balance and everything's like. I already saw a hello, so hi, how's it going? Hey guys, how you doing? Just gonna test the sound a bit here, see how everything goes. Let me know what the balance and everything's like. So if everyone can just let me know they can hear me. I just tested on another computer, sounds good, great. So yeah, for those who were here the other day when I only got to stream for a few minutes and I ran out all of a sudden, my girlfriend was cutting vegetables and she cut off a chunk of her finger there for a second, so that was a little bit worrisome, but you know, went, got stitches in, and she's all good to go. So we had a little kitchen incident, so that's what happened. So it's really not that big of a deal at all. So today we're going to take a look at, go over the markets. I'll talk about some swings that I'm in, and then I'll talk about a scan that I've been working on that was talked about, I think, in one of the webinars a little bit prematurely. I hadn't finished it yet, and there was a little bit of a bug involved, so we're going to see if we can actually turn that into a good scan today, and I'll share it with you guys. And then if you're in the room or something and people want to, you know, the people are still talking about it and they want the scan, just point them back to this video and I'll just like put the link in the description or something like that. Alright, so first let us get into the markets here. Again, I don't know really what to say when it comes to the markets now. Again, for people who don't know me, if anyone's new here, hello. Name's Michael, been trading for many moons. Primarily an algorithmic trader at this point. Trade based off statistics using yeah, well, that's the thing, but sorry, I'll continue my little speech. I'm an algorithmic trader. I build back-tested strategies. I have a bot run them for me, but I've also been around the markets a long time, looked at a lot of charts, so I do a lot of technical analysis myself as just a way to feel out the markets, decide what strategies I might employ under what environments, and take a look from there. So Jonathan was saying, I'm going to go over here first. I'm going to just bring in the chat, I think is probably the best bet, so you guys can see what it is that I'm reading. Jonathan says he was the one to find the bug. I was actually the one to find the bug. It was a miscommunication. I found the bug and then told the guys at Trade Ideas not to share it because of the bug, which was the stop. The problem is that I optimized everything in the strategy for that particular stop, but then the stop was bugged. So it was, you know, just a miscommunication. I said, here's an idea I'm working on, don't share it with anyone. It backtests too good because of the incorrect stop. And somewhere along the line, I think someone just didn't read the notes that I have in kind of our master file with all the strategies type of thing. So again, just simple miscommunication. So back to looking at the market, right? We're obviously getting a bit wild here, right? More and more parabolic, for lack of a better term, crazier and crazier. I think this is what we're seeing in this area is just a taking of the shorts to the woodshed, right? Anybody who was, you know, even if you were just betting on the government shutdown here, right? Getting murdered through here. Kind of feels like a bit of a blow off top before a bit of a pullback, but, you know, so did this, right? So did this, kind of, so did this here, right? And we get a little bit of sideways consolidation, and then up we go. So, you know, I think you'd be nuts to be leaning heavily short on the market. Full disclosure, and I tweeted about this live. Again, if you're not following me on Twitter, same name as the one in the chat room. You know, I do a lot of live positions of the bots getting in, mostly trading related. Every now and then you'll see a picture of my dog. That'll be about it. No, you know, I'm Canadian, so I'm not getting caught up in your guys' political nonsense and everything that's going on here. But yeah, I did tweet here 1 day ago. So in this area, I believe my bot got in SPXU, and a strategy I've been playing with for trading the inverses, knowing that at some point, however, doesn't seem like anytime soon, where we may enter a bear market. And then I like playing with the inverses, and that I find the inverses being a just a good vehicle when things get the last bear market, which a lot of you traders probably weren't around for. Things like the TZA and the FAZ and all these things came about, and they were great trading vehicles for the time. So I do have a little bit of this, but it's kind of too offset, I guess, for lack of a better term, a lot of the long positions I have going on right now. Again, not many, but some. But again, if you want to see this kind of stuff happen live, you know, if you're interested at all, right? A lot of my posts are the same, right? The bottom fished some IPHI today. All right, we'll go over these in a bit, but right, so I am in a little bit of IPHI right when I try to do it within, you know, a few minutes of the trigger. So it'd be somewhere kind of in this area that I'm in. I think I was up 60, 70 cents at the height of that, and then we pulled back a bit, still holding most of it. You know, stops under the low, that type of thing. But, you know, I'll update, and then if there's a trade that I think is interesting, I sometimes follow up with them if I remember to do it. Must not do it that often because I can't find an example right offhand. But yeah, so that's something that I want to mention, right, while I'm doing this analysis. I'm trying to curb any bias that I have because my bot is, again, in less longs and is in this one short position. The plan is, if I can get the inverse ETF strategy working the way I want, is to let that run alongside a bunch of long swings that I have, and then, you know, take the hit, knowing that the inverse strategy is going to obviously not work in a strong bull market. However, you know, if we get some overnight news event and crash or something like that, it will protect you on the other side. So you're just kind of hoping that when the strategy's not working, it's still doing better or not losing as much as the other one works, kind of thing. So Bruce just asked for my inverse algo. I might talk about that a little bit more in depth when it's closer to being finished. I don't think it's there yet. How are you backtesting number of occurrences? I'd basically just put every inverse ETF into a symbol list and started backtesting that. The occurrences are a little bit small. That's the problem. That's why it's taking so long to finish, I think. It's taking a lot of forward testing. But yeah, as long as you include enough ETFs, making sure you're not overlapping yourself with, you know, a double or a triple of the same thing, because they're going to trigger at the same time with the same patterns. But yeah, when you don't have backtesting capabilities, you rely on forward testing, which essentially just means building it in a way you want and watching it for a long period of time and adding that data to your backtested data. Her cut's doing well. She's healing up now. She got you know, a bit of a late night at the emergency getting healed up there, but she'll be doing fine, I think. They're supposed to be taking their initial bandage off in a bit. The Q's not nearly as wild, which is interesting, of the Spy. The IWM really, really lagging, which is... There's a camp of people out there that think the small caps lead. Again, something to note. I'm not placing any trades based off this stuff, but I just think there was times where I got too lost in strategy development, right? I got too lost in the numbers, hammering away at finding the right algo, and not nearly enough time looking at the markets. So I always just take a few seconds here to take a look at kind of what's going on. Oil seems incredibly strong. Interesting kind of piercing candle here. Generally speaking, you know, the old school technical mindset would have a little bit of a pullback from that. Which, since we know tech and small caps aren't really leading the charge, this one kind of go from here. No, they don't have those hike and ashy type of stuff. I'm not really the one to talk about with those either. I don't really believe in indicators and clouds and that kind of stuff. Everything I build is based solely off of price action. So that's kind of where I focus. This is just a scan that's looking for recovering stocks. I always try to keep an eye on it and set some alerts. Like this stock might be interesting on a break of 2. So I'm just going to create a price alert here and say at 199, maybe take a look at it. Again, very rare that I trade anything like this off my own, but I like having the alerts in. You know, once in a blue moon when something really looks good, I'll take a trade myself. And that's inverses there. Last one to look at before we'll kind of get to work is just the this squeeze me type of thing. So this is just looking for incredibly high short float stocks that have made a pretty decent change in the last 5 minutes. This INAP is very interesting looking. Could be breaking out of this base. I'll set an alert there. Over that base, some stuff might get interesting. Yeah, basically I found when I wasn't doing this kind of market, you know, just staring at the market for an hour or so a night, I kind of fell out of touch with what was going on out there. People were mentioning stocks that were very much in play that I hadn't heard of for a long period of time. So it's great to kind of be getting back into it where I watch a fair amount more, just keep my finger on the pulse. Alright, so let's take a look at the strategy in question and what the idea was and kind of what the glitch was, I guess. So you guys, I've talked to the kind of men in charge, and they're going to take a look at copy link address. They're going to take a look at what happened and look to fix it. But essentially, I built this strategy, and the idea was simply, you can see the name I used was a little bit different than the one they had to provide to the public. So essentially here I would take a look, and the idea simply was to look through and kind of say, okay, well, what happens if a stock is doing unusual options activity but not a lot of actual volume? Right? So, you know, is volume. So, again, a little bit history of me. I don't trade options personally, but I have 2 post-secondary designations based in option valuation from when my time I worked at hedge funds and I did risk management, due diligence type of work. So I know a lot about them. And I know, there's a saying in the hedge fund world that it's the tiny little cockroaches that actually trade stocks, because these guys, they're not getting nearly enough liquidity in stocks and they're not getting enough risk in stocks. So what they'll do is they trade quite frequently options, right? They'll trade some stock and options on the stock as well. A lot of hedging strategies using options. Even, your typical long-short hedge funds now use options for, risk management or, extra income, things like this. So from what I know that the big money is quite often in options. So is there a way to kind of tell trade ideas and say, hey, I want not only huge options volume, because every time there's huge stock volume, there will be huge option volumes, right? They're correlated. But is there a way to say, I want big options volume without big stock volume, right? Because when you just say big options volume, you get a lot in. So is every now and then a huge block of options going through indicative of a move that's going to happen in the last couple of days? So in the last live stream here we did the same type of thing, where this is where I got that idea with stock twits, and we said, okay, I kind of told the story about how I had a cheap stock for a little bit there that the bot got in, so I went to its stock twits to try to get some news on it, and it was just filled with these guys with 5 or 10 followers pumping the stock and just lying, right? Just saying there's going to be this news out tomorrow, look at this company is just straight up pumping. And does this do anything in the long run? We were able to basically do a kind of statistical study and say, no, it doesn't. So essentially we're doing the same thing with the stocks. We're saying, okay, well, can I get option volume today being less than 100? Which is just a way that you can tell trade ideas to tell the system that I want stocks that are doing less than they normally do. Normal volume would be noted as 100%. So if we're doing less than that, that's interesting to us. At the same time, on option volumes, we have to be doing 500%. So, we are doing 5 times 5x option volume, and we are doing less than 1x stock volume. So I went through and I refined it and I changed some things. When I back tested it, it looked phenomenal. I went through and I said, okay, we're going to hold it for 2 days. I had risk management on, everything looked fine, and then I ran it. And yeah, as you can see, the strategy just came out absolutely phenomenal. With very little tweaking on my end, we got something that was instantly going to be a hit, so your first reaction when you're new at this is to say, wow, that's great, I figured it out. I'm going to sell this to a hedge fund, and they're going to take these swing trades, and you're going to turn your $10,000 into $40,000 in 3 months and just be insanely happy. Right? Obviously, something went wrong here, right? Which is why, the old saying, if it seems too good to be true, it probably is. So again, when I posted this to the little sharing we have going for a new product they're working on, everyone went, wow, this is great. And I wrote a note saying that this is probably wrong. Turns out what was happening is I used what I wanted to say as a stop is I wanted to say, okay, you're going to buy these stocks, and let's just go through and look at a couple. Again, if you don't know, within Trade Ideas, you can run back tests on all this stuff. Any idea you have, you can back test. It's going to tell you, you know, how much you're right, how much you're wrong, your winner or loser, right? Strategy returns, projected returns. But you can go in deeper and you can actually click in and it will tell you the actual trades that would have happened. So that's what this window is here. So if we go in and I click on one of these strategies and say what would have happened, you can see it highlights the entry price by a blue line here, puts an arrow and says, okay, so on this green candle, zoom in a bit, at this line is where your purchase would have been. Where the green area stops, that's where you would have exited, and here's where your stop would have been. You know, so it's important that when you're doing these, you don't get caught up like I did on this one. I think it was late in the night. I didn't do a couple checks that I normally do. But there was certain situations anyway where, yeah, if you look, the blue line, so your entry point, would have been right here. And then it's saying, well, you would have put a stop right up here, and that's when you would have get stopped out. So you bought at 64.75, and then you put out your stop at 67.05, which instantly got hit because it's showing it up here. What really should have happened with this trade is it should have been a break-even trade minus the spread instantly. So basically going through and by looking at a couple of these, I was quickly able to say, okay, well, it's putting the stop well above where the limit is for a long. So then we found out what the real problem was, which is, you know, dumb old Mike. I was using for a stop change in 5 days. Right? So basically it was saying for WCC, the change in 5 days was negative. Right? So if the change in 5 days is negative, it's essentially putting a negative number and adding it to the price and using that as a stop. So that was mildly discouraging. So then I go and I rerun it, and you can kind of easily see it's not nearly as good when it's using a stop that's not broken. And this is a swing stop algorithm, which I talked about a little bit in the other one that I'm still working on, but I wrote, and is basically looking at the low of 5 days versus the low of today and using the lower of those 2 points, for lack of a better term. Right, so you can see with a different algorithm, it's still not the worst idea in the world. You know, your equity curve is still pointing up, but obviously not what it was producing before. So the game plan for today is to take this basic idea and just to cheat. I already have something that I'll show you guys at the end, but to take this idea and see kind of if I can make it work. And I'm not going to explain everything that I'm doing. A, there's a lot to it. B, that's what I do with my mentoring class. If you interested in that at all, links down below, as well as the link for Trade Ideas if you're interested in this software at all. That's underneath as well. Jonathan says, so the distance from VWAP would still be bad since it goes negative. That would be right. Now what you could do is you could write a custom formula, which we could look at a little bit later, that says price. You know, you can pull the VWAP price in the custom formulas, and then you could pull the price and you could subtract the two, and maybe take like an absolute value of that and use it as your stop. Something like that, right? You could say it's above VWAP, so then it would work. So there's some things that you could basically write that. You would just need to do it yourself. So first step, I'm going to undo because the initial scan was built around the idea of this stop, right? So basically, if I use a different stop, all of the filters I put in are now kind of useless. So we'll go through, and I'm just gonna pull out everything here. So I'm gonna be kind of crashing through this. If you're interested to know kind of my thought process and how I do all this, you want to learn that yourself, I offer mentoring service. There's a video on the channel that talks about it, as well as you can just email me as well. And again, links below that. But I figure any questions you guys have, if there's anybody who found their way here from the test drive that's going on now and they want to ask anything, fire them in the fire them in the chat there. Not seeing mentorship link. Should be my email. Yeah, if you scroll below the video and you go show more, there's just my email. You can email me, but I'll grab that YouTube video real quick, post it in the... Yeah, so if there is anyone here from the test drive, let us know, let me know what you think. Let me know. Again, I'm not working for Trade Ideas, so you can be as mean as you want. I'm always interested to see, because it's a complicated program, I'm always interested to see... Oops. I'm logged in as the wrong person. Sorry, hold on. Yeah, it's a complicated program, so I'm always interested to see kind of how and if you guys kind of get anything out of that. So one thing that's good, when I have this kind of basic idea down, it's still a good strategy. So it's got a good place for us to start with. So how I'm going to kind of build and tailor this is, I think I'm going to be looking for breakouts on this. So high momentum, high volume type of things. So I think I'm going to want to see like a lot of volatility, you know, probably a wide range. And again, once you get, it takes a while, but once you have a system and you get good at these, you can start to build these pretty quickly, which is great because you spend a lot of your time thinking that you're going to build something great and spending 40 hours and getting nothing done. So really then it comes down to idea creation, laying out the kind of ideas you had from the beginning, and then creating new ideas. I find a lot of my work that I give to myself now is reading and watching YouTube videos about training and figuring out what kind of the rest of the world's doing. Good. And then one thing that's very good to keep kind of in your mind is always going back and just doing this where you're clicking on some charts. I still think the human mind is good at picking the basics of correlations. You can see that one would have been a good one. In it. 2104, worst case stop, 1860. See, that's a wide stop. I think you could have got away with tighter. So this is why I go back and I look at the charts, because I want to look at the ones the ones that worked, could I have gotten away with another one? Like, here's another one. Again, you read the charts by this blue arrow is your entry candle, this blue line is your entry price, and this red line's your stop. Now that stop's a little bit better to me, right? You got in here, your stop was at the low of the day. This one's still going well. So I'm looking at the winners and I'm trying to think, is there any of these winners that wouldn't have made good money without having a tighter stop? And so far, no, right? All of them had a stop that wasn't even brought close to. Right, this one, yeah, it would have been about the same if the stop was a little bit under the lows. That wasn't even a very good one. Yeah, this one could have gotten away with a better stop. So, I'm actually going to rerun this. And I'm just going to see what happens if I say above the low, right? So, by putting above low here, what's going to happen is it's going to calculate, okay, here's your entry and here's the low. And then put out the stop, calculate the stop, putting it out accordingly. And again, this is stuff that you can use when you auto trade it as well, which is one of the reasons I put them in. So what's interesting is it's obviously our win rate is taking a hit, but if we look at our profit factor, which is kind of an equation for just how much money you made, you can see that we actually make more on a net basis kind of per trade than we do here, because we've just crushed the risk reward. So for more of a discretionary type thing, I'm going to play with this one for a while. And again, I'll share this at the end, as long as I don't have to put any custom formulas in it. I don't think I'll get it to the point where I'll be able to automate it here, but yeah, but I think this will actually turn into something interesting. So again, questions, concerns, anybody new here? Or are we all old fogies, been around forever, kind of have a basic understanding of what's going on right now? Yeah, I do again, I place a trade once every few months myself. The rest is done with the Brokerage Plus, which is this thing right here. As long as, right now it only works with interactive brokers. But yeah, if you're with interactive brokers, you can just hook your this Brokerage Plus with the interactive brokers API, and then any of these windows you can backtest. So like, for example, if I take this and I save it, it's not really ready, I can load this over here and I can say add to existence and edit trading strategy, and you can see it will have brought over our stop here, right, our entry time here, and then you can, at daily, it will close one day, tomorrow after one day after the open kind of thing. So trailing stops are not working yet. Oh, maybe they are. I think they may have been turned on. I haven't used them yet. I think they're fairly new, but it looks like, yeah, looks like they may have added that in the recent update. I'm gonna play with that. And custom filters work, yeah, but you don't, it looks like you don't need a custom filter for trailing stops, which is interesting. Oh, latest beta they turned on. Okay, well, there we go. So yeah, there is now. That's cool. You know, I happen to know under it. Okay, so the question is, do you happen to know under backtesting in advance here, they have trailing stop bars? And he's asking the time frame. I'm 90% certain they're 1 minute time frames. So if you click on it and you put in 15, then it should be the last 15 minutes. But it's going to be the last 15 1-minute bars, not the last 15-minute bar. If you get the difference. Don't use that either, really. Again, I haven't found success backtesting with trailing stops or using them in live trading, to be honest. No, 1 bar equals normal 15-minute volatility. Oh, well, there you go. So when I'm doing a swing trading algorithm, I never drop below 100 trades. So we really don't have that many more trades we can cut off. If you start getting under that, you're falling dangerously into curve fitting. Again, we have something that looks very nice here. However, I don't spend a lot of time on the screen. I don't recommend it. I think it's best to spend time here, which looks really good. Because here you're going to see how many trades you're going to get on a given day, and each of these bars is a day. So you can see a lot more green days than red days, and other than here, there really wasn't any bad red day. So I'm looking at these moving averages versus moving averages, and I know I just finished saying I'm not a big fan of indicators, but the reason I use those has nothing to do with the fact that I think the moving averages have any special powers. The one that I added had the 20-day versus the 200-day, right? Put the 200-day like this. And if the 20-day is above the 200-day, then that means regardless of the short-term price decline, we're having intermediate price rising. So okay. So we're still talking about the average, the 15-minute bars. 3.14 says bars as units refers to the average amount that a stock price moves between one 15-minute bar and the next. So that's basically, I guess that's how it's going to set your stop. It's going to look at kind of the average 15-minute bar range and use that. So that's essentially what Trade Ideas has here. Hold on, let me just do this. And then we'll go, this is the smart stop that Trade Ideas uses, which essentially uses the same type of thing where it's saying, it's looking at the last 15 minutes of trading and guessing based off that volatility, what is going to kind of happen to the stock. So this is good. If we can get a decent win rate here while we really shrunk our stop loss, then this is going to turn out pretty good. Sometimes you need to go backwards. I don't like that change. I kind of like the way it looked before better. So what I had added there was a minimum of the 30-minute range. I got a question. Are you running intraday strategy or working on swing only? I'm still running some intraday strategies. I found that lack of ideas, I guess, is one of the reasons for the switch. The other is just the market we're in. I think as we get kind of more bearish, if that ever happens, there might be more. I might focus back more on intraday kind of trading, but the market we're in now is really inducive to swing trading, and I believe it's a natural transition of a trader as age comes. When I started trading, I was scalping on a prop desk for pennies and doing 200 trades a day by hand, just trying to mess with the specialist. You know, from there I went to a point where I don't look under a 15-minute chart now. I don't even know what a 5-minute chart looks like anymore. It's been so long. So I just find as I'm in this game longer and longer. Hello, testing. Am I back? I unplugged my mic and plugged it back in. Sound. I'm back. Okay. I may have kicked up the cord off bottom of my mic. So, yeah. Basically, I said I was switching from intraday trading to more swing trading just because of the market. It's very inducive to swing trading right now, and as well as I kind of enjoy. I'm a slow rational thinker. I'm a chess player. I'm not a, really poker player, for lack of a better term. I like the chill more than the excitement. But it's because the VIX is really low and we're just going up every friggin' day for the last couple months. If we ever enter a bear market again, I'll focus. But I currently have two bots. One's day trading and one's swing trading. I'm working more on the swing trading bot because I'm new to it, but I still run the both. I think now swing trading might be the way to go, whereas if the market ever picks up again, I think day trading will be better, for lack of a better term. But really, trading is like anything else. It's whatever kind of fits your personality. So I basically only have one move left. I would love to get this up to over a 55 win rate. Again, we have to do things that make sense as a trader. Question is how many strats am I running at the same time? The day trading bot runs about 6 at any given time. 3 long, 3 short. This is really good. So, sorry, just to interrupt. We changed our stop loss so that it's just this above low here. AL. So it's always important that when you do that, you actually look how and optimize against that stop. So against doing the above low, you can see that if above low, our stop is less than 50 cents, it's pretty bad in comparison. So this might be our last move. So the day trading account is running 6 long, 6 short. Or no, 3 long, 3 short. So a total of 6 strategies. It's essentially just looking at, there'll be some revision to the mean strategies there, which I find work better intraday than swing. There'll be some you know, gap type strategies that I think work better. Obviously, day trading than swing trading, and then just some news type events. Whereas the swing trading is a lot more focused on looking for something that is going to carry for a few days, and for that I'll run 3 to 4, I guess. Basically, I'll run until I see my buying power just constantly tapped, and then I'll adjust it down where I'm just using the ones that are performing best at the time. Is it all running with Brokerage Plus? All the swing trading stuff is, yeah. The other prop firm one, I use another bot that existed before Brokerage Plus existed. A guy named Stock Ticker made something. He's now actually working with Trade Ideas, building their bot, but this old one he has is still functioning for now anyway, until an update comes through that kind of messes up something. It's much more limited, so I wouldn't really recommend it. Interactive brokers I think is fine for most retail guys. I like doing some prop stuff as well, but it's with Brokerage Plus or worse, I guess is the way to put it. The Brokerage Plus is much better than the one that I was looking at. So we're getting there. I don't want to take much more out of it, or I feel like I'm curve fitting. The more you add, I find... oh, this is an old one. Get rid of this. Or wait. Yeah, get rid of this. The more you add, the more you have to do to mess with the strategy, the worse they become. Right? I get some people who send me filters that go all the way out, and the way I look at that is that you're tweaking it too much. What we're trying very, very hard to always keep in mind while we're doing this is to not curve fit. I have my whole procedure that I've built, I guess, over the time is try to prevent this. However, it certainly can happen. And you know you're curve fitting when you're putting in things that don't make sense, you're putting in too many things, or you've shrunk your trading strategy down to like 7 trades. All of which I see far too often. Yeah, if you guys want me to show you around Brokerage Plus or something before I go, let me know. I don't know if... Again, no one piped up when I asked about the test drive, so I don't think that there's anyone here that's part of that. You're all probably a little more hardcore. I think it's the future. I want them to put more work on the auto trading side than the Holly side. I think the workflow I have for swing trading would be perfect for somebody with a 9-to-5er, so much so that the reason I do a lot of mentoring and all this stuff is that I have to find other things to do with my time. And, as a trader, you gotta trade that time for money. I build all my strategies at night on the weekend. You should do a video how not to curve fit using... That's a good idea. I'm going to write that down. Yeah, that would be a good idea, to do something that's not curve fitting. So yeah, my swing trading, if I was swing trading only, is build your strategies over the nights and the weekends. Spend a couple hours every now and then coming up with a new idea, building it, refining it, finding new ideas. You kind of set all this aside, and then when the market opens for the opening, I don't even have that account open, because I know what's going to happen is all throughout the morning the bot is just going to start picking up things that it thinks is good swings at the time. then what I do is right before the close is when I kind of open up that account and take a look at each trade, each swing that I'm in individually, and adjust stops, you know, sell part if things are working out, set alerts, do this type of stuff. So the actual intraday work required is, you know, at 2 o'clock in the afternoon when everything's super chill and nothing's really going on. So if you were working full time, it would be awesome because you don't need to be laser focused and you don't have a very specific time frame that you need to pay attention to. I know a lot of people who trade from work and they're trying to figure out how to get that 9:30 to 11:30 kind of booked away so they don't have to do any real work and then kind of make up for it later. But it'd be better if you could just tailor your workflow around what it is that you do. So we're again at a point that we're not really willing to shave too much off, but we are looking for some basic things to try to see if we can take off a couple more trades. I'm looking at places that I know affect the market a lot. Like this, for example, I'm going to add this one in where the SPY has to be moving with you. Makes sense, so I want to check that, right? I want to go and I want to look at how volatility affects it. I want to check that. I know we already put that in. You know, these are things that I've just kind of learned over time are important. This might be a custom. Okay, it doesn't affect it anyway, so that's fine. So yeah, I have places where I want to go. I have things that I want to look at. I do try to explain as much of these as I can in the mentoring sessions and things, but it is hard to... A lot of this is just gained through experience. You know, I can ask the guys at Trade Ideas, but I'm sure I'm up to 50,000 back tests by now, probably. So I've done it, and the thing is, when I was doing it, there wasn't really a instruction manual. I'm one of the first, so I've made all of these mistakes. Let's see, these are just working. Yeah, I think it might be to the point where I'm trying to tweak it too much. What I just put in, I put this in. Let's take this out. So we might just share this like this. And the other thing we're going to start doing is there's certain things that you can't run through that optimize tab that you need to run through networks to identify criteria that affects. You're talking, the question was about an LSTM networks. You're way outside of my frame. Keep in mind, I know a lot of people come here and they try to talk programming. I can't program. I'm not a IT guy in kind of any way, shape, or form. I'm upgrading my computer from a hard drive to a solid state drive, and I'm kind of terrified about how that works. So I'm a trader. I just kind of moved from there. Yeah, deep learning. That would be a question for the guys over there. That's like what Holly is doing. She's learning every day on how to optimize these better. I guess me looking at it is machine learning as well. All right, so we got some questions here. That's good. So I was running out of content. when I use the odds maker in the preview graph falls really far below 0, but my actual results are positive. Is the preview not factoring? No, you probably have like an insane commission or like crazy slippage or something if it's doing something like that. These 3 lines, if you don't know, black is your gross profit. This is your profit after commission, and this is your profit after commission and slippage. This is going to be kind of dependent on you. I put in 100 shares just because it's easy for my slow brain to do the math. And then if we say, okay, we're going to lose 5 cents in, 5 cents out. And if you're trading with interactive brokers, your commission is about $1 per 100 shares. So that's probably what's happening. If not, let me know. Without using the option to position size based on stop when using the odds maker, I don't even look at the dollar gain when optimizing. I just use the percentage and profit factor. Yeah, I'm the same as you, 3.14. I don't really... This isn't super interesting to me. Neither is this, right? I'm with you. I want to see... Really, profit factor is huge for me. I won't auto trade anything that's 2.5 or under. I want to see more than that. So yeah, I'm with you. Where this is the most kind of important factor out there. Can I elaborate on my cloud setup for algo trading? All I do is I buy. Yeah, well you're okay. Well that's your problem. He says $1.86 commission and 30-cent slippage. So that's 30 cents in and 30 cents out. So that means you're losing 60 cents per share on slippage according to your numbers there. Maybe you meant to put in 3 cents in, 3 cents out. So you're losing 6 cents per trade. That's probably a little bit more reasonable. If you're losing 30 cents in, 30 cents out, you probably need to do something about what stocks you're trading. Increase the volume, right? And then my cloud trading setup is I use Amazon Workspaces, which is like $35 a month. And with that, you basically have a full Windows 10 machine in the cloud. So for me, I like being mobile. I have one screen. I don't have a million screens, right? I try to do, you know, when I went to the summit, I talked a lot about, you know, how I was traveling. I use a Chromebook, which is a insanely cheap little laptop that, you know, I think my cell phone is probably more powerful than. But because I host all this stuff on the cloud, it's all relevant. And, you know, living in Canada and having the internet go down frequently because of, you know, lines freezing and stuff like this, it's nice to say, it's nice to just know that if my personal internet goes down, that because it's being hosted in the cloud, it's just going to be fine. It has nothing to do with what my local internet does. So just kind of securities and redundancies and that kind of thing. The other thing is you can select where you want to host your server. So I actually host mine where the Trade Ideas offices are. And I have like 10 millisecond delay. So not Windows Server. No, I don't. If that's better, I don't know. I Googled it, and the Amazon Workspaces were getting good reviews, and it was easy. It was $35 a month, so I could buy 2 and not care at all. And it just is simple, and I'm simple. So, what filter would you use for trailing stops? Again, I've never found success with trailing stops in either my discretionary trading or my auto trading. I just don't use it. I think it'd be interesting to be able to, use advanced exits, and when they build them into Brokerage Plus, I will. Like with an advanced exit, you could say something like, if we ran this again, we could go in and say, we could make our own exit strategy where, let's just say a new... we could say a new 5-minute high and change from, right, that's over the, or shit, other way around. That's under, so we'll do a new 5-minute low. That's under the 20 period moving, the 20 period moving average on the 5-minute chart, right? And then you could run that, and this was probably will go like crap, but you could say that, right? You could say I want to stop out there. Not really. No, I'm not testing it because I can't trade it. Is basically the best way to put it. How much hardware spec do you get when I use whatever the $35 a month was. It's like a dual core with 4 gigs of RAM or something. It's literally the only thing it's doing is running a copy of Trade Ideas and the copy of the brokerage platform, and that's it. It's not even generating like scan results or anything. It's just got those 2 programs open, and that's it. So it's whatever like the lowest is. It doesn't need to be fast at all. Where is the Trade Ideas office? They don't have a physical office, but the servers are in California. So I put the Amazon workspace in California, which means the lag from me clicking on something and it registering the click is a little bit apart. But for me, it doesn't really matter. No, I use the Trader workstation with Interactive Brokers. Again, it's a full version of Windows, just located somewhere else. So I just downloaded Trade Ideas and I downloaded Interactive Brokers and I synced them up the same way I would on my local machine, and then I just let it go. And then I've got a remote desktop app where I can log into the different ones. So on this screen you're seeing now, which is my local PC, which is where I do nerdy things like play Overwatch down here, I have both of those open when I want to look at both of them, or if I want to run native applications, I do that here. So just making a video outlining your AWS setup, what options you selected. Yeah, I can do that. I'll write that down too. I always like video ideas. I'm doing live streams because I kind of ran out of content. I'll add that. Do I need a second Trade Ideas subscription? Yes, I do. You need one for each bot. Now, if you were running multiple accounts within IB, you don't, because you can select. So say you had like a day trading account and then you wanted to do like swing trading in your IRA account or something, you could do that through one bot, because there's actually a place where you can specify which strategy is going to be used by which account. Okay, cool. So running Brokerage Trust, there's no other bot requirements. No, if you have Trade Ideas, and again, if you don't, there is a link under the video. Yeah, if you have Trade Ideas and you have Interactive Brokers, that's all you need, right? So basically what you'll do is you'll open up Trade Ideas Brokerage Plus. And when you have Interactive Brokers open, I'm not going to because I haven't had a chance to shield any numbers or anything. You'll just hit connect, and away you go, right? You just need to do I have a series on my YouTube channel about setting it up. You just got to make sure some things are enabled within Interactive Brokers, and then that's it. And then it's basically just set up like this. These are your strategies. Right now, they built some custom ones for you so that you can right click and click trade, and you can see, if I hold it there, that all of the strategies below are open. So you can buy using $5,000 at market, and it will do the math. You could, say buy and risk 25 cents, and it would do the math and put a 25-cent stop. And these are like scripts that you can get in and out of positions yourself quickly. Now, when it comes to building strategies, it's just kind of like I saw here, where I'm going to save. Oh, I'm not going to backtest it. I'm going to save this, and I'll give it to you guys. Save and share. And then if you share this with the room, which I'm fine with, just also sneak in where you got it from, the YouTube channel. And then load from cloud, and you'll see it here. And I'll add to existing. You can see it pops up here. And if I edit this strategy now, it's already going to be linked to this window. So it will send out and it will go, okay, right, CCK triggered. And then it goes and it looks at this because it will be alerted within this window. Now, a lot of things get carried over just by loading from cloud, like start time, end time, stop loss. If we scroll down, right, at market close plus 1 day. The limit price you can do yourself, right? I always use a limit, never a market. I'd rather not get filled than get some insane slippage. You can also, your position sizing, right? If you just want to trade 100 shares, you can do that, right? If you wanted to assign $5,000 per position, you can do that. You can also do based off of stop loss. So if you wanted to risk $75 per trade, it will look at where your entry would be and where the stop loss is and would calculate the share size. So it will just kind of take care of all that for you. And that's Brokerage Plus. And then as soon as it's here and everything's set up and enabled, when you're connected, when something comes through, it's just going to place the trade for you. And again, for me with swing trading, I think that this is a great meld for people who aren't willing to give everything over to the bot, where they could do what I do, where you kind of open up the platform and say, okay, run. At near the end of the day, you check the positions that you have. I will basically look at it in the ones that I'll move stops on certain things, right? I'll never widen a stop, but if I tighten a stop, I will. If I'm up a lot in a position, I might say take half off and reduce share size, that type of thing. But yeah, and what you'll see is, again, we won't see any positions, but they'll actually open up here. You'll be able to track all the details. Keep in mind, if we go through here, this doesn't update tick by tick in real time. It just doesn't. You may need to, I may need to bit.ly link it. Because if I save link, and then I load from cloud, yeah, it loads for me. Oops. Oh wait, did I do that wrong? Copy link address. Load from cloud. Paste. Yeah, I think, yeah, YouTube changed it. So just click on the link instead. Yeah, it's putting in a YouTube link instead, guys, if you look. So instead of copying it from here, because when you paste it, it creates it as a YouTube redirect thing, right? So you just have to click on it, right? And you're going to get a window that opens up. Copy this link in here and click load. Crap. That doesn't work either. What? Hold on. Save and share to cloud. Copy. Paste. Could be YouTube being weird. Yeah. What if I bit.ly it? Hold on. Okay, the bit.ly one should work. So, click on the bit.ly link, and then copy the link from the address bar, and then load from cloud, and then load. And it should open up for you there. There we go. Finally. YouTube was adding something, probably like a tracker. Every night, Brokerage Plus seems to turn off strategies requiring to enable below the bell. Is it me? Is there a way to automate it? I can't always be there if I'm traveling. No, that's because Brokerage Plus actually, or Trader Workstation disconnects as well at midnight for a second. So it's a bit of both, but so no, I haven't found a way, but it hasn't been a problem for me, right? I always have a remote desktop app if I'm traveling, so I can just take 2 seconds and log on to my, you have from 12:01 in the morning until the market opens, right? And then I just log on from my phone. You just got to click all enable selected, right? Just those 2 buttons. So if you were a programmer, you could probably automate something to hit those 2 buttons, but I haven't had the need, right? Because I can just do it from my phone. All right, so we got that loading. So is there questions? Any more questions? Everyone has the scan. They can share it with all of their friends. Again, I don't ever just completely automate. Like I won't just dump this into the bot and say go. It's not good enough for me yet, but I always want to watch stuff at the same time. So, don't just, hey, here's a strategy and then go, right? Watch it for a few days. We just had a bug in the same strategy that we just worked out, which is good because actually we were able to shrink the number of trades that were in the strategy. The win rate's obviously not as good as when it was broken, but at least we know we're going to get these, and the stops are actually going to be fairly tight on them. I think the average loss was 60 cents. So for a swing trading algorithm, that's a great stop, right? If you're a small trader and you're taking 100 trades or 100 shares, you're only risking $60 on any given trade. I'd like to usually push these and see how far, like if you held it for a week. Oh, I have to put the stop back. Crap. That's gonna actually mess up your scan as well. For example, I moved. Oh no, that's right. That makes it a lot worse. Okay, so that's interesting. Sometimes you want to start playing with the, or is it? No, that's still not right. Yeah. All right, I'm gonna share this with you one more time, guys. I was doing an example about that. That advanced stop, and that got saved with everything else. So I'm going to save and share to cloud. Let's make it real time. All right, so I'm going to make this a bit.ly. And then I'm going to paste it in here for you. when I was doing the example of the advance exit stuck. But what I mentioned I'm going to do now is I'm actually going to take this strategy, and I usually just like to do things like mess with the time, the hold time, right? See if sometimes maybe this is a good or even a better intraday trade, right? Maybe it's better for a 2-hour hold than a 2-day hold. I'll extend it out and I'll say, okay, well, what about multiple days longer? Things like this, just to see. So every now and then I come up with something that was a great day trade or an okay day trade that's a great swing trade, or something that's an okay swing trade that's a great day trade. So I definitely just kind of want to check through and make sure that we're doing something here that is the most optimal. So let's see if we just hold it for like 2 weeks, what happens. I initially picked the days that I did because I expected that this kind of quick option play might lead to some craziness of just people getting excited about the stock, right? They read about, oh, look, there was a lot of options that got traded, so maybe, let me get in, hold it for a few days and see what happens. So that's kind of why I picked the days that I did, but that doesn't mean that that's optimal. It seems like it's pretty optimal right now. You can get a much better profit loss here. You're talking 3-to-1 risk reward here, right? And a great profit factor, but it really tanks your win rate. And this one's actually even better. So it might be that it is about a week that is the best hold time. So tomorrow plus 4 days would be a week hold. You don't use targets for any of your swings. I don't use targets for most of my trades. The only trades that I actually use targets on are revision to the mean trades. I find that you're usually better off not, for lack of a better term. You're usually better off not capping your return. I find that if you add targets, it cranks up your win rate, but always lowers your profit potential for me. So we're getting exactly what we expect. The longer we hold it, the more potential win there is in there, but the lower win rate. If we go back to something like this, you're talking insane risk rewards, but very low win rates, which is exactly what we should expect, right? All right, so I'll stick around for a few questions, and then I'm going to call it until my stream jinxes something again and someone else gets part of their finger cut off. So I'll just kick around for some questions if anyone has any questions. If not, might do one stream by the end of the week. If not, I'm going to take a look at some more traditional videos. I know this long, hour and a half content is not for everybody. It's not for a lot of people. But I like it, but I want to do both so that there is both on the channel for people that are interested. On your IPHI swing from today, yeah, so I tweeted this one out live. We got in somewhere in here, and I took some profits, I think around this area, just because it was a great move in one shot. I think the bot took, I took about 3/4 off of the trade, give or take. And that's usually what I like doing with a lot of these swing trades. If I get, almost $1 move in the intraday time frame, I think it's crazy not to at least sell half. So I'll usually sell like half, 2/3, something like that. And then the stop is just kind of in this area now. Manually. I manually... The bot is programmed to trade the strategies kind of 100% like this. Just 100% like they are. Just in case I'm away or I decide not to intervene in any way, shape, or form, I roughly know exactly what the bot is going to do. I know it's going to put out a target here, or not a stop loss here, and then it's going to sell after X amount of days, and that's what I've optimized to do. If I intervene, it's because I decide to, and the reason I did was, again, simply when I brought up this in the afternoon, that's kind of what happened. I saw that I was up a point. I know this strategy averages around there as profits, so if I can get that in one day, I'm gonna at least take some of it off. I still have a couple hundred shares, not very much, like I think 200 shares or something. With the stop, our entry was, in the 70s, and I got out again, so it was like 60 cents, 70 cents a share. So the stop, yeah, it's kind of below this area right now. So now I know it's the concept that I call free shares. If this stop on the remaining position gets hit, it's still a net positive trade. So unless there's something crazy that's going to happen, right? We still have a while into earnings, and we gap way down, then the 200 shares that I have are free. They can't hurt me in any way. So then I get very good then at letting my winners run, right? Because I'm like, who cares? I'm up like $100, so I'm willing to give back $100, and who cares? And then in a week or a month or something, if we get back up to kind of test this resistance, well, it's like $1,000, right? So it's the only way I found to deal with both of the demons. You take some money, you let the rest just go, and I'll try my best to forget about it. The time stop has been canceled. I put the stop in this area, and then I'll just look at it in a week and see what happens. If I could only choose one alert to figure without considering filters, what would I choose? Trick question. That's not... that's... what's a good analogy? It'd be like saying, what are your favorite rims, without knowing what kind of car you're going to put it on. You're not going to put the same style of rims on a sports car that you are a Jeep. Without considering the filters. The filters, if you're ever just plugging in an alert and trying to fit it with filters, you're doing it wrong, right? You're looking to build something that you've seen happen in the market, and then use the proper alerts and filters for it. So I really like the break of support and resistance, if that helps, but it's kind of a trick question there. From a stats perspective, is it better to have a fixed share size or a size based on stop loss? I think from a trader point of view, I think it's much better to have your risk consistent. Whether or not it is from a statistical point of view, I haven't really thought about for a long time, but you got to remember, we're not robots, we're humans, so we will interfere if things go wonky. You shouldn't get too excited, and you shouldn't get too depressed on a single trade. So, if you're risking $100, $100, $100, $100, and then you lose $1,000, regardless of whether or not that was the most statistically sound thing to do, that's something that puts you in a vulnerable trading situation where you might say, oh, well, shit, my next trade I need to risk more to make back this loss that I had. And then things like trading death spirals start, right? You can ruin, you ruined 10 returns with one loss, right? You can make $100, 10 times in a row and lose $1,000, and then you had a 90% win rate and you still lost money. So for me, it just makes more sense from a human point of view to say I'm going to risk X dollar per trade, right? And that should be some reflection of your account. If you have a $25,000 account, because I know that's the minimum in the US for day trading. If that's what you have, your risk should be like $100, $200 maybe per trade. And it should be like that on like every trade. And then you should reassess, right? If you get your account up to $30,000, then maybe you up your risk to a certain dollar per trade. But from a psychological point of view, you should never have any insane winners and you shouldn't have any insane losers. Obviously having insane winners is better. I've read a lot of things where they say it might not be. You might people end up giving back more if they've got ill-gotten gains from some bullshit luck. You're better to be, again, as even keel as humanly possible through trading, and making sure that you're not taking on any unnecessary risk on top of what you normally do is important. Just think of the whole you can boil a frog alive just by slowly increasing the water and he doesn't feel the difference. That should be the same when it comes to the risk in your trading. It should be increased so small and incrementally throughout time that you don't notice one way or another. So someday you've gone from risking $100 on a trade to risking maybe $10,000 on a trade, but the increase was so slow it doesn't affect you in any way. The guys out there that are saying, I've made 10 grand in a day, well, the only way they did that is by risking thousands of dollars in a day, and hopefully they got there by being incredibly rich, right? So when they say, oh, I made $10,000 in a day, well, that doesn't affect them because they have so much money that they can take a $10,000 hit and not be phased. So, that's the first thing I tell people when they say, oh, I'm going to follow one of these guys. Again, we don't need to name names, but I made 10 grand today. Is yes, but the only way they did that is by risking, unless they made, a 7,000% return that day. The only way they did it is by risking an insane amount of money too. And the only way they're allowed to do that is because they probably make a bunch of money from a bunch of other sources. So, they don't care if they lose $10,000 because they're making a couple $100,000 a month from other things, right? So just look at your account, look at a reasonably small percentage, like 1% or less, and then go from there. So can we backtest with position based off stop loss? We can't yet. You can do it some ways. Like, again, I know when you backtest, right, I know on average I'm going to lose. On this strategy, I don't know. But say on a strategy I have, I say, okay, I want you to use the above low stop loss. And I'm going to then cap above low and say I don't want that to be more than $1, right? Then I know I can trade 100 shares and at max risk $100, but most times risk less. So there are ways you can do it, you know what I mean? So you need to just put on your kind of thinking cap for that one. You can also do it with something like instead of share size, dollars, and then use a percentage risk, right? So if you traded $5,000 on a trade and then used a percentage risk, then you know what your risk is going to be. So there are ways around it. But that's essentially kind of what I do, is I make sure I cap the upper end of my risk, and I'm happy with that, right? I know that for, say, one strategy I use the swing stop algorithm, and in the strategy, I'll cap the swing stop algorithm off at like $1.50. So I know that if I'm trading 500 shares, the most I'm risking on any given trade is $750, with most other risks being lower than that. So where there's a will, there's a way. All right, any more questions, guys? Or I will see you sometime this weekend. I'm going to commit to either another stream or a video. I've been slacking. It's time to get back to work. Start making videos. I've got a new couple computer parts to update this thing from the $300 computer I bought years ago, so I can actually maybe do some editing of videos like this, where I can cut out some of the dead air and that kind of stuff. So how do I get into the next stream? Shameless plug here. If you go to YouTube, if you're not subscribed, make sure you subscribe, which is down below here. And then next to this, if you hit this little bell, every time there's a new video out or a new, that's pretty much all I do here. It will email you, and then it will, if you've got notifications turned on your phone, it will ding your phone. And that's why I had a guy ask why I play a song before I actually get started, and that's why. Is because I know there's, of the 3 people that are here, I know there's at least 2 that have clicked this bell. So that gives them time to get the notification, click on it, get here type of thing. Because I'm looking at my phone, which I'm logged on to a different account on, and I got the notification from me saying that I'm going live. So that's the best way to do it. The other thing is my Twitter. I am the same. I am just at Bonpara on Twitter. I'll always tweet. Like, I think I tweeted this morning that I was doing a live stream tonight. And then I tweeted like an hour before I went live, and then maybe a half hour before I went live. So I'll do a couple tweets just to make sure you've got the time. So those are the ways. All right, guys, I guess there are no more questions. I'm going to wrap this up. Again, either by Monday, if I say it in public, I have to do it, I will do a video or another stream. So. Oh, we got one more question here. Hold on. There's 2 here. Hey, how do I back test saying I want stop loss of only 5 cents? In your back test, you just enable stop loss, $1, and then just type in 5 cents. I will say good luck on having a stop loss with only 5 cents. Probably not going to work out too well, but that's how you do it. You just click on use constant amount, and then you just type in whatever you want here, right? $1.50, whatever. You use another bot with prop firm. You can't use brokerage plus. That's only if you use Sterling Trader Pro. That's the only one they work with. To rewrite or reprogram. I don't program. I'm not a programmer. I don't know if I get that question, Robert. Again, I still think good luck. I think that's showed me something on Twitter with crazy profit factor. I don't share my optimized strategies. They get people into trouble. I don't sell them either, right? So it's not like I'm being greedy. I teach people to build their own. I think that's better for everyone, to be perfectly honest. Plus, I think that one was filled with customs. If it's the most recent one. I do a lot of these. It's just, it's dangerous to just take someone's strategy and start trading it. So I just don't. I don't do that. Alright guys, so I'm going to call it here, and I will see you guys next time I'm on.